Namaste students, I am Dr. Soumya Prakash B S. Welcome to Educator Guru YouTube channel. I will be teaching you second year PU Accountancy, the theory aspects of all the chapters. Dr. Shrikanteshwara K S will be handling the problems solving section. So today in this video we are taking up non-profit organizations, the theory part of it. The theory portion includes explanation of the concepts and the question and answers of all the sections, that is important questions and the Q&A, the exercises at the end of the chapter. We will discuss everything. So come, let us start with the first chapter today. So as the name itself says, not-for-profit organizations are not-for-profit. They aim at providing services to the members of the organization or to the public at large. So they are the organization basically which work for the welfare of the society. Now in this picture you can see few areas where not-for-profit organizations exist. So it could be religion related, a non-government organization, trade unions, professional organizations, cooperatives, mutual trusts, health industry, public and societal benefit organizations, charitable organizations, human services organization, environment and animals, education, arts, culture, humanities. So anything related to service to the society, they come under the purview of non-trading organizations. So here are few examples: government schools, religious organizations, clubs, welfare societies, charitable institutions, government hospitals, public libraries, etc. So the next point here is about the features or the characteristics of non-profit organizations. So here you should actually understand non-profit organizations, not-for-profit organizations, non-trading organizations are all synonymous. So anything that is related to the charitable organizations or not-for-profit making organizations are called with various names like this, but they are all the same. Now, there are four major characteristics for not-for-profit organizations. The first one is about the entity. The entity character here is a non-profit organization is having a separate legal entity like any other, uh, it could be a partnership firm or a company form of organization. So any other business, however it exists, the same way this non-for-profit organization also exists as a separate legal entity. So it is usually promoted by a group of individuals with a similar objective or similar motive, and it could be group of companies or group of enterprises also. They can also come together and form a non-profit organization. Then it is services. So it is usually established for the welfare and service of the society. So it could be either for the society at large or for a limited membership number. Then the third form is about the form of the organization. It is usually set up as a charitable society or an association or club. And the main objective is not earning profit. It will be usually services that is rendered. And that is why most important thing is the surplus is not distributed among the members as profit. So the common sense here is when the name itself says it is not for profit organizations, then you will not call anything at all in your accounts saying it is profit. It is either excess of income over expenditure or surplus that we mention it as, but it is not called profit. So obviously there is no profit motive. The fourth objective, the fourth characteristic here says it is not for profit. There is no profit motive here. It does not function with the objective of earning profit. So that is why the surplus is also not distributed among the members or the founders. So as discussed earlier, education, healthcare, sports, and any other public organizations are also called non-profit organizations. And they are organized. When I use the word organized here, it also means it is registered as a society or a trust to run the organization, and they are usually managed by a managing committee. So there will be committee members like the president, secretary, joint secretary, vice president, those terminologies apply to not-for-profit organizations here. And the main source of income, so how does this run? What is the source of income for this organization to run? So it is usually grants that is either given by the government or donations given by big companies or individuals, or income from investment, whatever subscriptions or donations that these organizations get. This can be again invested somewhere else, and there could be a secondary income out of that as well. So keeping all this theory portions in mind, we have to make sure that we do the final accounts of these non-trading or not-for-profit organizations. So basically there are three accounts that we prepare, or two accounts under balance sheet. One is receipts and payment account, and the other one is income and expenditure account. These are the two accounts, and then finally balance sheet. So this forms the whole final accounts of not-for-profit organization. So as I told you earlier, not-for-profit organizations are same as non-trading concerns. So somebody who doesn't trade or are considered as not-for-profit. So moving on, we have to now understand what is in the receipts and payment account, what goes into income and expenditure account, and what goes into balance sheet. So balance sheet, I think you might have already studied so far in your previous years. So balance sheet has assets and liabilities like any other business organizations. But receipts and payments account and income and expenditure account are slightly different, not in terms of debit and credit concepts, but in terms of the expenses and income that we consider. So basically receipts and payments account should be considered as a real account. So in your first year PUC accounting, you might have studied real account, personal account, and nominal account. So receipts and payments account should be considered as a real account. So which means the principle is debit what comes in, credit what goes out. So it resembles a cash account. When I say it resembles a cash account, only cash items have to be taken into this receipts and payment account. So it is a summary of cash receipts and cash payments relating to a given period of time. So usually 1 year. So this will also have, sometimes it will have an opening balance. You should start with the opening balance, and of course we will have a closing balance at the end of receipts and payments account. So in the next slides or in next few minutes, you will come to know what goes into receipts and payment account. Going on to income and expenditure account, this should be considered as a nominal account. So as the name itself says, income and expense, so it is usually considered in nominal accounts. Again, as you have studied in the first year PU, nominal account principle says debit all expenses and losses, credit all incomes and gains. So we should consider the items that are considered as income and the items that are considered as expenditure in this account. So of course, as mentioned earlier, there is no profit or loss that is considered in not-for-profit organization. We don't term it as profit or loss. In other words, we call it as either surplus or a deficit. So surplus is when your income is more than your expenditure, and deficit is when your expenditure is more than your income. Balance sheet, again, we have discussed that it is like any other business balance sheet, but again the terminologies are different. We have to make sure we call the capital as capital fund or general fund, because it's usually the fund that is the initial amount of investment that is done in this non-trading concerns. Out of that fund, everything else is actually managed. Yes, the most important part of this chapter is this. there are two things in not-for-profit organizations. One is capital item, the other one is revenue item. So while we are actually doing the accounting here, we have to always keep in mind whenever an item comes to your purview, you have to segregate it as whether it is a capital item or a revenue item first. When I say capital item, it means whether it is a recurring item or a non-recurring item, whether it is a one-time nature, whether it has a one-time nature or it has a recurring nature. Whatever has a one-time nature, lifetime, one time or very rare, that comes under capital. Whatever has the nature of recurring, every day, every month or every now and then, very often, that comes under the revenue item. Then comes the segregation, whether it is a receipt or an expenditure. So first we are discussing capital receipt and revenue receipt. The differences between capital receipt and revenue receipt. So first difference is with the meaning. Capital receipts are the income generated from investment and financing activities of the business. So this is usually one time. Revenue receipts are the income generated from operating activities of the business. So day-to-day activities, it becomes the revenue receipts. For example, if there is a organization run by group of people, let's say it's a museum. So the museum will have entry fees. Every day visitors come to that particular museum. So that becomes a revenue receipt. What? The entry fees that is paid by the visitors to the museum becomes a revenue receipt for the museum. On the other hand, capital receipt is non-recurring. It is a one-time payment. For example, a person who is very passionate and fascinated about the art in the museum, he wants to donate some 10 lakh rupees to that museum. That becomes a capital receipt because you don't get it every day. The term difference is long-term and short-term, of course. And where is it shown? Capital receipt is always shown in balance sheet. Revenue receipt is always shown in income statement or income and expenditure. So as mentioned earlier, it is non-recurring and recurring. What is non-recurring? Capital receipt is non-recurring. What is recurring? Revenue receipt is recurring. So the same has been explained here. I just gave you a diagrammatical representation. So there are examples here as well. Capital funds, loan money received, deposit received, life membership receipts, legacies, special donations, etc. This becomes capital receipts. Under the examples of revenue receipts, we have dividends, interests, interest on loan granted, interest on bank deposit, rent received, etc. So now comes the expenditure portion. So whatever we discussed so far was related to receipts. Now, again with the same capital and revenue differentiation or distinction, we are going to understand what is a capital expenditure and what is a revenue expenditure. So far we have studied whatever comes to our organization as a receipt, capital receipt or revenue receipt. So whatever goes out of my organization, debit what goes out. Whatever goes out of the not-profit organization, whether it is capital in nature or revenue in nature, that is what we are going to figure out now. So first difference is about the purpose. Capital expenditure is incurred for acquisition or erections of fixed assets to be used in business. Revenue expenditure is incurred for day-to-day conduct. The same difference, whether it is non-recurring or recurring. So recurring comes under revenue, capital comes under non-recurring. Earning capacity. So capital expenditure increases the earning capacity of the business. For example, if there is a library or the same example museum, if the building is expanded, if the construction is expanded, then we can have more visitors. So it increases the earning capacity. Revenue expenditure does not increase the earning capacity of the business. So for example, if you have a small plumbing expenditure that you do, that is, or everyday fixing of some things in the organization. So salaries. So all these things, they do not increase the earning, but they are all expenses that has to be incurred in order to run the business. The benefit of capital expenditure extends to more than 1 year. So this is long term. The benefit of revenue expenditure extends only to current year. So this is short term. Accounting treatment, capital expenditure again shown in balance sheet, but revenue expenditure, it is shown as an expense in trading account or profit and loss. Here I cannot say trading or profit or loss account, but this comes under income and expenditure account. This is for business organization. Nature, it is non-recurring in nature, and this is recurring in nature. We have already discussed this. So the same thing has been explained here in the form of sentences. You can refer to this. So this is very, very important. I'm stressing again and again. You will definitely have a question in your question paper about revenue expenditure, capital expenditure, revenue receipt, and capital receipt. So purchase of fixed assets and investment becomes capital expenditure. And moving on, we have another thing called deferred revenue expenditure. So this is one kind of revenue expenditure which cannot be written off in 1 year. So it is usually spread off for a number of years. For example, there is some heavy advertisement expenditure that you do on probably on the organization that you are setting it up. So in the first year itself, you cannot claim all the expenditure as one revenue expenditure, and you need to spread it across for various number of years. So it can be preliminary expenses. Maybe you will pay some registration charges. You'll pay some stamp duties, which is very heavy when you're actually forming a trust or a charitable organization or a society. And there is brokerage, discount on issue of shares, heavy expenses on repairs and machinery. So all these things can be deferred for a number of years. So this is very, very rare in your um, practical accounting that you do. But this is for the information. You should know what is deferred revenue expenditure. There are some important terms that are used in financial accounting of non-trading concerns and their treatment, so that I have discussed here. The first thing is capital fund. As I told you earlier, this will be in the balance sheet. This is nothing but the assets and liabilities difference, and it includes legacies, life membership fees, entrance fees, special donations, surplus, etc. The second one is subscription. Subscription is a regular source of income, so it comes under income and expenditure account. Life membership fees, it is a capital receipt, so it comes under balance sheet. Legacies, it is a capital receipt, it comes under balance sheet. So legacies are usually the gifts received from legal representatives of deceased persons. So for example, if Mr. X writes in his will saying that after his death all his property goes to some charitable organization, let's say it goes to some temple or it goes to some church or any other religious institution, it becomes a legacy that is received by the organization from the person who is deceased. So that is a capital receipt, it comes under balance sheet. And then entrance fees, again entrance fees, this depends on the organization that we are working on. If it is a regular entry fee, every day in and day out, whatever we see, that becomes a revenue receipt. But here entrance fees usually is considered as capital receipt and it goes to balance sheet. Donations can be special donations, it goes to balance sheet. General donation, it goes to income and expenditure. So same way, entrance fees also. Government grants, if they are not received for a specific purpose, they should be taken into income and expenditure account. So usually government grants are very often, which means it could be recurring like monthly or yearly, something like that. So that becomes an income and expenditure account. But if the government says this is the grant given to the construction of building, then it becomes a capital item. Special funds, it could be tournament funds, prize funds, etc. Everything goes into balance sheet because they are non-recurring. Again, If separate fund is maintained, we can consider that as a deduction from the fund account. If there is no fund maintained, then it should be debited to income and expenditure account. The next is honorarium. It is a payment made to a person for rendering services. For example, there is a guest lecture arranged in a museum or an art gallery. Then it becomes an income and expenditure account. Usually it is recurring in nature. That is why it is considered as a revenue expenditure. So this is about the important concepts that is considered under non-profit organizations. So stay tuned for our channel to know more about the problems, how to solve them in the future videos. Thank you.